and welcome to BBD, Business and Banking Dialogue, your one-stop show which brings to you every day a topic of interest. Today is no different. It's topical and much needed debate. It's meaningful privatization of PSB. I repeat, it's meaningful privatization of public sector banks. So meaningful privatization is making news ever since the former Reserve Bank of India governor, Mr. Patel, Urjit Patel, observed that he does not expect any government to pursue meaningful privatization of public sector banks. He writes in his book, Overdraft, Saving the Indian Saver, where is the fun in owning banks if control over operations, managing them, and determining their regulation is not possible? The likelihood that meaningful privatization of banks will be pursued by any government is small. That's that's the opinion of Mr. Urjit Patel, the former RBI governor. To know more about meaningful privatization, I think participants just note the word. It's a talk on meaningful privatization of PSBs. Please join me. My name is KK, your host and moderator, in welcoming Professor Ananth Narayan, the BBD show, Business and Banking Dialogue show. Welcome, Professor, to the show.
Thank you, KK. Thanks for having me.
Thank you, sir. Thanks for coming, sir. Briefly, he is international banking and financial markets expert. He was previously with Standard Chartered as the bank's regional head of financial market for ASEAN and South Asia. Prior to Standard, Professor Ananth Narayan has worked in Deutsche Bank and Citibank. He is also a faculty member of SPJIMR Institute of Management Studies, a very, very popular institute in Mumbai. Good afternoon, Professor, and once again, welcome to the show.
Thanks, KK, and same to you.
Thank you. So, several government committees and the RBI have recommended that India should not have more than 5 state-owned banks. Government's serious intention to privatize public sector banks come to the fore in the last couple of months during the Central Cabinet's meeting with the PM's Economic Advisory Council and the Niti Aayog meetings. Why these thoughts, and how did we get into the current situation of debating whether we should have a meaningful privatization of public sector banks?
Once again, KK, thanks for having me, and lovely to be here back again with EPS, and thank you to EPS. It's a very good question that you've asked, KK, and I would go back a little bit and say the reason why we are having a whole host of debates about the overall financial sector, not just about public sector banks, is our financial services ecosystem is in trouble. And that's the bottom line. It was in trouble even before COVID-19 hit us. It's definitely in trouble now. And there are various levels of issues. One, and the most glaring one, is the level of non-performing assets. The number was already high before, and thanks to COVID and no thanks to COVID, it's going to become even larger now. We just don't know how it will become because the visibility around that and the transparency around that is not yet complete. So that's one big chunk of a problem. The second problem has been in relation to governance. You know, there is a big trust deficit, particularly among some financial institutions, and the financial services ecosystem, as you know, KK, relies on trust. If there isn't trust, the whole system can suffer quite a lot. And the last part has been, of course, the fact that our markets have not been deep enough, and we saw issues around that in March, etc. So there are various levels of problems which have permeated in the financial services ecosystem. One big chunk of that is in relation to public sector banks. And let's start with what the issues are, and then we can come down to what the solutions are. A big problem has been the symptom of the problem has been that the non-performing assets in public sector banks are very large in relation to other banks. So, for instance, as of March 2020, the financial stability reports that the public sector banks had gross NPAs of over 11.3%, which at a minimum is expected to go beyond 15% by the end of March next year. Right? Against that, private sector banks had about 4% or so of gross non-performing assets, expected to go up to 7%. So public sector banks are more than double in terms of the non-performing assets. Now, this is not to say that public sector banks are bad. It's a symptom of a deeper issue. And to me, the basic issue is public sector banks do not enjoy a level playing field vis-a-vis private sector banks or foreign banks. And to me, the bottom line is that the actual running of public sector banks is done by bureaucrats and by political leaders out of Delhi. It's not done by professional bankers at the very top. And to me, that's the bottom line. So when people talk about privatization, they don't really mean privatization for privatization's sake. They're starting with how do we make public sector banks truly autonomous in terms of their professional performance, in terms of the way they're allowed to operate, away from the clutches and the guidance of New Delhi, the Department of Financial Services, and the political leadership. And this is not to do with any particular political dispensation. This is across, every single political party. There have been issues which have permeated into the public sector space. So I would frame the question, KK, not so much about privatization, but about creating a level playing field where public sector banks can maximize the value and maximize the output for the country as a whole. And I think a lot needs to be done there in terms of giving them a level playing field. You're muted, KK.
Can you hear me now?
Yeah, loud and clear.
Okay, sorry, I don't know how it got unmuted. Okay, that's the technology. Okay, when you are saying that, perhaps the PSBs don't have a level playing field, but they also have the advantage of the government backing in everything. You have, no matter how much the problem is, the capitalization, the recapitalization, that keeps happening to these banks. Every time they have a problem, the government is there to back. The private people don't have all that luxury. So how is it that we are saying that? I'm sure there are other areas where they have a problem, but are we still saying that they don't have a level playing field?
Oh, absolutely, KK, on multiple levels. So let's start first of all with simple accountability and the freedom for autonomous professional operations. Anish Kumar, the chairman and managing director of our largest bank, the largest bank in our country, State Bank of India, earns a total compensation of 31 lakhs in a year for a balance sheet size which is, I think, over 40 lakh crores now after the amalgamation of all the public sector banks, of all the state bank group companies. That is downright ridiculous. Clearly for the kind of operations that Mr. Rajesh Kumar and his team operate on, they're thoroughly underpaid. It doesn't make sense at all. And then they can't change the pay, by the way. Likewise, when it comes to the bank and State Bank of India, because they are government-owned entities, they are subject to the so CBI, CAG, CVC, all of them have jurisdiction over these banks' operations. And you often hear of retired public sector bankers being hounded for some decision that they took many, many years ago, which turned sour thereafter for whatever reason. Private sector banks are not subject to those kind of oversight of the 3 Cs. Likewise, when it comes to even large operations on lending, etc. Now, these are allegations, but I can tell you what the allegations are. 10, 12 years ago, there were allegations of telephone banking that, Delhi would call up or somebody from Delhi would call up and ask bankers to make loans to certain large promoters. In fact, there are allegations that many of the large NPAs that permeate today were a result of that telephone banking, which, by the way, is easier, probably, given the oversight and the control that Delhi has over public sector banking for public sector banks. Now, it's not that telephone banking might have gone away right now, but now you still have, Jan Dhan Yojana, you have Mudra, you have 59-minute MSME loans, etc. So, as long as Delhi can dictate what needs to be done by banks, the chances that this is a professional operation being done with a thought-out professional outlook reduces to that extent. And again, private sector banks are not subject to that kind of problems. By the way, just in the last bit, to be fair to Delhi, I don't think anybody really directs these kind of things with an intent to make the system fail. It's with the best of intentions that you want money to go to MSMEs. It's with the best of intentions you want money to go into infrastructure. Unfortunately, the road to hell can be paved with best intentions. So long story short, KK, there is definitely no level playing field between public sector banks and private sector banks. They don't have professional autonomy to operate, to hire, fire, to pay appropriately, to even take decisions appropriately. And they're subject to a lot more scrutiny from government agencies. In fact, far than the private sector. One last point, KK. In fact, the PJNI, you mentioned that there are lots of committees which have gone into public sector banks and banking as a whole. One of the reports I really like is the PJNI committee report of May 2014. Yes. It actually mentions what you just mentioned, which is that it seems paradoxical that the government, despite being the largest owner for public sector banks, maybe without realizing it, ends up creating conditions which make things worse for the public sector banks compared to private sector. So there is a problem definitely which needs to be addressed.
Sure. Okay. Fair enough. So let's get to more into the meaningful privatization. So what are the motives of privatization of banks? Is privatization a panacea for all the problems faced by the public sector banks? Is that the solution that we are saying these are all the problems they have, and if you privatize this, it's all gone? Is that something that you would propound?
Not at all, KK. And in fact, I think it's very, very important we debate the right issues around this meaningful privatization. By no means is privatization the panacea to everything, not at all. So let's look at two separate sets of issues. Now, we've talked about professional autonomy for public sector bankers to do their business professionally and to be accountable for it. That's one issue that we are trying to address, maybe through putting a distance between Delhi and the banks in Mumbai, or by way of privatization, as some commentators are asking for. So that's the rationale behind asking for privatization. It is not a solution to governance issues. Governance issues, frauds, things going wrong, mistakes being made is ownership neutral. They happen in public sector banks, they happen in private sector banks, they happen in foreign banks. Those who either believe or argue that privatization is not you're trying to solve for governance issues with privatization, that's complete nonsense. We are not. Governance issues have to be handled separately. Things about getting better auditors, better supervision, better risk management policies, better boards, better investors, better analysts. All of that applies to every single financial institution, irrespective of ownership. Let's not confuse governance issues with professional conduct issues. We are looking for professional autonomy for public sector bankers. Towards that end, privatization could be a solution. By the way, if you don't want to go the whole hog of privatization, you could even go down giving more operational autonomy to banks in the true sense. Even that with government ownership, I think is fine. What we cannot countenance is government control through bureaucrats and through politicians of day-to-day commercial operations of banks. That is what has led us to trouble in the past and will lead us to trouble in the future as well. That is what needs to be addressed. Privatization could be a way out. If it is too sticky, let's go for autonomy. And by the way, DBS in Singapore is a great example of effectively being a government-owned entity, because Temasek is the largest shareholder in DBS. And yet there's a fair amount of distance between the government of Singapore and the day-to-day operations of DBS. They are allowed to run autonomously and professionally to a large extent. So to me, privatization is not the panacea. It's not a solution definitely to governance issues. Those are larger issues across every single entity in the financial spectrum. This is more about, 60% of our banking is public sector banking. Unfortunately, they do not, there are lots of excellent bankers in public sector banks. They do not have the professional autonomy to run business the way they ought to as bankers. At the top level, unfortunately, and the outcomes are seen, the interference from Delhi and bureaucrats and leaders with the best of intentions, unfortunately, leads to bad outcomes as far as output is concerned.
Okay. So ladies and gentlemen, I hope you have getting the interest in this particular topic of meaningful privatization. It could be privatization. It could be autonomous. Basically, the idea is to say that, can I have less interference from Delhi and bring in better governance, better conduct, better overseeing of the things. And so like Professor said, DBS of Singapore is a good example. So let me take you to what Raghuram Rajan wrote in his book, I Do What I Do. That's a book he wrote. He said, I have a simple metric of progress here. We will have moved significantly towards limiting interference in PSBs, that's the subject matter that we have, interference in PSBs, when the DFS, the Department of Financial Services, which oversees public sector, in which overseas public is finally closed down. So basically, he's talking of shutting down DFS, something that Professor also mentioned, but not in so many words. And its banking functions taken over by banks, by the bank board of directors. Similarly, Urjit Patel in his book says the likelihood of pursuing meaningful privatization of banks by any government is small. So keeping this in background, Professor, would you agree mergers and disinvestment of public sector banks will not solve the problem? It will only avoid the problem. What's your take?
Great question again, KK. So look, mergers of banks and creating larger banks does make sense. After all, banking is about scale, and having 4 or 5 large public sector banks as opposed to what we had in the past, 22 large public sector banks, now down to 12, I think is a good reform. It's not the most critical reform today. We talked about 3 large sets of issues as far as banking is concerned. One is the large NPAs. Second is huge amount of governance issues. And third is the fact that the ecosystem is in no shape to fund growth going forward, and that the markets, secondary markets, etc., don't really exist. Those would be the priorities in my view. Consolidation and creating large public sector banks are not the top priority. They're good, but not the top priority. Now, here is the problem of whether we go via disinvestment or whether we go into actual privatization or we go into autonomy, either which way. What did the PJ Naik committee recommend? It recommended that first transfer all the ownership of government entities in banks into a separate BIC, a bank investment committee, bank investment company. Okay. Then bring all the State Bank of India and public sector banks under the Companies Act, which is a level playing field as far as operations is concerned. So they go out of the ambit of right to information of the 3 C's, CAG, CVC, CBI, all of them, they get out of the ambit. And then they become board-run companies, which are allowed to take autonomous decisions. They are accountable. They can hire and fire as they require, and ensure that there is a professional, efficient output out, and shareholders are answerable to the shareholders. Now, eventually, the PJ Naik committee also recommends privatization, but it starts off by saying BIC, independent boards, and let there be a distance between Delhi and the banks. The problem, KK, is who has to implement this reform? This reform has to be implemented by Delhi. So the same bureaucrats and the same political leadership that enjoys the fact that they control Delhi, the banking system right now, have to undertake reform that make their presence redundant. Now, this is extremely difficult. And one of the reasons why I guess Dr. Patel is saying that it's meaningful privatization will not happen is precisely this. I will go one step ahead of what Dr. Patel is saying. I'm saying even meaningful autonomy for public sector banks, forget about ownership. Meaningful autonomy is very, very difficult because you're asking people in Delhi who control it currently to actually relinquish that control. Now that calls for a huge amount of courage of conviction. And if I can use a beaten up word, it also calls for a huge amount of patriotism to say, there is something larger than me and I want to give it to the system, back to the system than keeping it with me. So successive governments, successive bureaucracies have struggled to undertake this particular reform. It is going to be extremely tough. But make no mistake, KK, I think the current predicament and the predicament over the last 10 years, in fact, clearly tells us that status quo cannot continue. The more we make the argument that, we need public sector banks for 20 reasons, for ensuring there is financial inclusion, for ensuring there is outreach to all villages, all great reasons, but those are essentially obfuscating the fact that we've used this taxpayer funded large behemoth of organizations very, very inefficiently. And because of this lack of professional autonomy, the output coming from them is completely suboptimal and a complete waste of national resources. So either autonomy or disinvestment or privatization, whichever shape and form, I think is absolutely required at some stage. I'm just hoping it comes sooner rather than later. Now, one last bit. Personally, I think the easier or the better route to push for right now is not really privatization. So even though I've worked in foreign banks throughout my life, given the amount of political heat this will generate, I think we are better off by saying let's go for autonomy rather than privatization. Let the management of the public sector banks be given professional autonomy, a level playing field, away from the three C's. Make them accountable to shareholders, let them do what is required as professional bankers. The reason why a lot of people don't believe that will work is they simply believe that no amount of political change or change from Delhi can allow this to happen. The only way you can ensure that interference is not there is by privatization. So many people who push for privatization do so because they believe autonomy is just not possible. But I, for one, I'm saying instead of going radical and saying privatization, I think going for autonomy would be a good starting point. After having cleansed the system, got some experience around it, then we can think about the way forward rather than going whole hog into privatization.
Yeah, step-by-step approach is better. So, Professor, I read sometime, maybe a couple of weeks ago, that there is this move of BIC, and there was also a gentleman brought from abroad to head this, and the shares of all the public sector banks would go to BIC, etc., which you talked about. Is that something happening is that something of a move that the government is doing it?
Oh, I have no idea, KK. So while
Okay.
Delhi does ask for feedback and they do take feedback very well. Not let on to what they're thinking really. So I have no idea what is being thought. But a BIC is very much part of what was recommended by the PJ Naik committee of 2000, right? So in fact, to start with, this government did begin by looking at the PJ Naik committee report. If you remember, the Bank Board Bureau as well, and they set it up. They actually set it up, and they started to have board appointments being done by the BBB rather than by the government. After they stopped the full implementation of the PJNI committee recommendations. And I go back to what I said, KK. Any kind of recommendations or implementation of any kind of recommendations that call for autonomy will take a lot of courage of conviction in Delhi, because effectively they have to undertake reforms which relinquishes their own global banking. So if what you're suggesting is indeed happening, a BIC is being formed, I think it's a great step. It's exactly in line with what PJ Naik has recommended. It will then be a stepping stone towards creating at least a legal level playing field between public sector banks and private sector banks. And it would be a one step further towards ensuring that. And by the way, this is something I have to emphasize. In my career, I have come across several public sector bankers. Even today, in my various capacities as members of boards, etc., I come across many public sector bankers. They are an extremely fine lot. I mean, they're extremely well experienced. They know their business. In fact, they could give any private sector banker or foreign banker a run for their money because they know banking far better in the Indian context
Absolutely.
than anybody else does. What they probably lack is the professional autonomy that we spoke of. So I do hope that the PJNI committee recommendations, or at least some part of it, do get implemented. They will go a long way in ensuring we don't repeat this cycle of because of the DFS angle and because Department of Financial Supervision and Delhi operates the banks, that we keep going down this path of building up a large number of non-performing assets and end up underperforming as a financial services ecosystem.
Yeah, thank you. No, I had read about this maybe 2 or 3 weeks ago. There was a lot of buzz around that. But let's see, let's hope something happens because this is a bold step. And so there are bold steps already taken by this government. So maybe this could be, perhaps let's hope for it. And I also agree with you that, instead of going all out, hog out for privatization, perhaps the intermediary step is autonomous so that you give them the autonomy to do things on their own, and then perhaps privatization at some time span. So good to know that that's exciting times coming ahead for banks. So, ladies and gentlemen, I hope you are engrossed in this discussion as much as I am with Professor. Professor puts it so very well about what this whole scene is, what the problem is, and what's the solution, perhaps, according to him. Uh, it's almost a half an hour to our discussion, and I would request you to please put in your questions. I'm sure you all have a lot of questions. The bankers out there must be saying, let me ask this question to Professor. Please do that. Please do quickly because we just have another half an hour. And the earlier you get it, the better. Often it comes very late and then I'm not able to take it across. So I look forward to your questions coming, whether it is through the Q&A box, or you can even ask Professor directly a question. So look forward to both of them. Professor, the general opinion among intelligentsia is that the government should act like an investor in rather than as the owner of the four banks after the disinvestment or privatization. With that perspective in mind, what should be the modalities of meaningful privatization? What should be the approach to deal with multiple issues, including people aspects, assuming that we are going in for privatization? What should be the approach to deal with multiple issues, including people aspects?
Great question again, KK. So what I would suggest is the following. For large chunks of banking, I think it's best that banking be left to shareholders and to the boards rather than to the government. Now, of course, the government and the regulators have a big role to play in terms of financial inclusion, in terms of technology, in terms of making sure there's fairness, in terms of making sure that there is suitability and appropriateness of what is bought and what is sold, so nobody is taken for a ride. So in terms of supervision and governance, obviously there is a lot of role the government and especially the RBI has to play. That role can be played across all the players in the banking and the financial services ecosystem, not just for public sector banks. There's also the possibility that when it comes to extremely remote areas in the country, if you leave it entirely to the private sector, you might simply not get the results that you want. And you also want some amount of fairness to be in place. So, in fact, one suggestion which I quite like is that instead of privatizing every single public sector bank, keep one or two banks with you as the government. So if you do think there are social requirements which have to be met, including by pumping in taxpayer money, keep one or two banks where you pursue your social, regulations, your social objectives. But let the rest of the banking system operate professionally and operate through a board and shareholder and stakeholder managed kind of approach. Now, this is not to say that the government should give up trying to, for instance, direct benefit transfers to farmers or to people who are in the bottom of the pyramid. That can be done separately. You don't need the banking system to ensure that that money goes out. You can do it out of from the fisc itself. So I think allowing banks to operate as commercial entities would be a great output. And should they actually sell down? Should they actually hold it as an investor? If we do go down the autonomy route rather than the full sell down route, I would suggest that it is better that it transfers the holdings to this BIC, to this bank investment company, and allow the BIC, which is manned by good professional, maybe former bankers of unimpeachable integrity, etc. Let them manage the operations under and delegate the responsibility to the boards of the companies. In that sense, what you mentioned, that the government would be more like an investor, that would be the model that will be used. Eventually, if the government does sell down these stakes and becomes a minority shareholder, then automatically these things will become part of the process. And to summarize, KK, what I think the way forward is recognize that 60% of our banking is, in a sense, shackled. Now, people get upset when you say shackled because they say, oh, there's no interference. There is no interference at the ground level, at the branch level. But I can tell you, just look at the overall results. How is it that the gross NPAs of public sector banks are more than twice that of private sector banks? What is the rationale behind that? And I can tell you, as a person who is an academic right now, that the straight answer which stares you in the face is the fact that the government has been directing these banks to operate in a particular way with the best of intentions, but we've seen the results in front of us. So to me, therefore, the need for the government to get away is very, very important. You cannot be an active shareholder, because that moment you do that, you start going back to the status quo of government actually running the particular banks. It has to be run professionally on a level playing field. If you do disinvest, then eventually that will get taken care of by itself.
Thank you. So I wanted to ask you one question, but before that, let me, like I say, I always want to get the participants' questions and your views about that. So I have a first query from Mr. Velur Kannan. It's a long question, so let's see. Let me read it out for you. So he says privatization is not a panacea for issues of governance frauds, mis-sellings, which has to be tackled separately. We do not want either intervention or interference in the acts of banks. How do you expect banks, especially PSBs, to raise funds or equity in the market if they are expected to be purely acting with social good and do not make any returns for the stakeholders? Efficiency and speed of decisions are possible only if the government also acts only as an investor who contributes to the bank for capital and for quality decisions. Today, the PSB possibly listen more to Delhi bosses than regulators and often caught between the two. I think we talked about that distancing need to be done. Can we have a few banks do only what the government wants it to do, and the others to act independently with the board of management, which is something that you propounded, Professor? So board should choose the best route to give the best service to all its stakeholders, be it employees, officers, etc. I think I think he's making more of an observation. I think you should deal with it, right, sir? Right, Professor? Is there anything you want to?
Yeah, sure. I'll just repeat a few things which Mr. Kannan rightly mentions out here. One is it's a mistake to look at this entire argument of privatization as a means of solving governance. I think that's we have to reiterate that privatization is not for solving governance issues. It is for giving public sector bankers professional autonomy on operations. That's point number one. Okay? The second part is, on this part about social good and how do banks raise money if they're doing social good. It's a bit of a myth that only public sector banks can do financial inclusion or social good. And to that extent, KK, I'll point out to what's happening currently with MFIs, for instance, the microfinance institutions. In fact, we know of a large microfinance institution which has now converted itself into a universal bank and has done a fair amount of good job in terms of actually getting financial inclusion in vogue. The point I'm trying to make is, with the right thrust, including from the regulator, including from the government, on digitization, on getting a single type database for borrowers, quality, etc., even financial inclusion can become a commercially viable business. And we are seeing that with MFIs, with small finance banks, and many other financial NBFCs and financial models. So it is a myth to say that you have to burn taxpayer money in order to do financial good. Okay, so that's one thought I want to leave behind. The second thought is, let's assume that you have to then still have some parts of very remote India, etc., which have to be serviced by some financial institution left to themselves, capitalistic private sector banks will not go there. Then fine, then keep one or two banks with the government, which will do precisely this. But that scope of those operations of those banks would be very, very limited. It should not be a large sprawling bank like the current large public sector banks that we have. In fact, I would argue you could even use things like the India Posts, which by the way now has a bank as well, to ensure connectivity with the hinterland to the more parts of the country. So that's point number two. And the third point that Mr. Kannan makes very well, I would just reiterate, every time I hear this argument, oh, but privatization will not solve for governance. Privatization is not to solve for governance. Governance is as much a problem in private sector banks or in foreign banks as it is in public sector banks. And that is a set of solutions which needs to be put up altogether.
Yeah. And we have had issues with private banks. 2 or 3 banks did have problems right now, which we all know. Another point I thought I would like to observe, Professor, is that why not we have a very, very strong cooperative movement out there. And they are looking at the social sector, they are at the villages, at the remote centers. Why not strengthen that base such that you make big banks out of them, and that they can serve the rural and the remotest population and some of the social needs of the government. Perhaps that's another fact we could look at, including NBFCs.
So yes, KK, I have heard of ideas and proposals which suggest that maybe there could be an amalgamation of many small cooperative banks and other kind of institutions
yes,
to form a larger entity which is dedicated towards financial inclusion and spreading out to the hinterland. What I would want is that the operating model of some of these entities like cooperative banks needs to change. I think eventually we will need some kind of uniformity across regulations. The moment you're a large financial sector firm, whether you're an NBFC or a housing finance corporation or an MFI or a universal bank or a payments bank or a small finance bank, you can't have artificial divides which allows for regulatory arbitrage. That one entity, is not governed properly by RBI because it falls between the tables between the government and the RBI, and therefore it does what it wants. Another entity is, between the state government, local government, and RBI, and with a whole bunch of politicians thrown in between. You want to avoid those kind of anomalies. So I have no problem with whatever entity makes commercial sense, but they should be viable and they should be transparent and they should be safe, which means they should be all under one particular regulatory regime, which is good and solid, and therefore gives faith, which is the most important ingredient in any financial services ecosystem.
Thank you. Pushpendra Khandelwal makes an observation. Nowadays, banks are being run by DFS, and board is only a decorative ornament. Board implements instructions of DFS in toto. Actually, there are not all professional autonomy. I think that's an observation. We'll move on.
Mr. Khandelwal is, I guess, in a sense, repeating what I said.
Yes.
Putting it a little more, I think he's putting it better than I did. Look, as I mentioned, I don't think any bureaucrat, no Babu, no Neta, does stuff intending to make a mess, right? They do it with the best of intentions. 10, 12 years ago, did it look like a good time for India to invest in infrastructure? Of course it did. Even today, it looks like a good time for India to invest in infrastructure, education, healthcare, nutrition, roads, and so on and so forth. Is it a good idea to put money into MSMEs? Of course it does. It makes a lot of sense. So no policy decision to facilitate money towards infrastructure or MSMEs is a bad policy. But the moment you get into the operations and you start directing money to one place or the other, as a Department of Financial Services or as a bunch of politicians, you are sowing the seeds of what we have seen repeatedly play out, and not just this decade, but in prior decades as well, of bad loans, of bad lending decisions, of kicking the can down the road, of evergreening, extending and pretending that everything is fine. All sorts of issues come up. which is why leave banking to professional bankers, give bankers the professional autonomy to do what needs to be done. Let the government do what it needs to do, which is ensure there is a level playing field, ensure there is governance, ensure there is supervision, and ensure there are things like investments into technology, infrastructure of various kinds being done so that the ecosystem can flourish. So I do have sympathy for what he's saying. I do think that professional autonomy is a critical requirement for banks, and I do hope it comes about. Like you said, it's a good time to make these changes.
Yeah. So, ladies and gentlemen, continue with your queries. If somebody wants to ask a direct question, you can do that. Raise your hands and you can ask the question directly. The back office will take you across. So, Professor, banks are, I think we had this question also. Banks are about governance, and getting the governance right has been touted as one of the motives behind privatization. Yeah. However, private sector banks also seen failures in governance not so long ago. Recent examples are already there in front of us. How does one believe that bank privatization will fix the governance issue to a large extent?
Yeah, I think we've addressed this question several times, KK, which is
Yeah.
the question is absolutely right, which is that governance issues cannot be resolved by privatization. Anybody who says that privatization is for improving governance is got it wrong. It's not for improving governance. It is for giving professional autonomy to public sector bankers. Now, which is why, while we keep beating up public sector bankers, it's also important to look at what needs to be done for governance as a whole, right? And there,
Yeah.
a whole set of issues are there, which, by the way, the regulators are trying to address. In fact, both SEBI and RBI and the government, they're all trying to address this. First, the most critical part of ensuring governance is to learn from the past mistakes. So what
Yeah.
went wrong in the past? You had money being siphoned off by certain dubious promoters. You had misstatement of results. You had being economical with the truth, and therefore not giving the right picture, etc. And to be fair, things are going along in that direction to try and address these issues. So, for instance, in the last the MPC meeting, Governor Das came out with this rule around current account, opening of current account by one of the reasons behind that is to ensure there is no siphoning of money by the promoters or the management, and that end use monitoring of being deployed can be done properly. Now, there are lots of issues with the circular which we can debate separately, but at least they're trying to resolve that part, right? Likewise, if you remember 10 years ago, KK, banks had very little visibility of what the status of loans was across the financial ecosystem. But today
Yes.
we have databases like CRILIC, which actually collate information across all the banks, across all the NBFCs, and make it clear as to which borrower is in what state in respect of his or her loans, etc. So there is sharing of information. There is a lot more of data availability there. Third, thanks to the government, there's been a lot of digitalization and financial inclusion. So GST has allowed for digitization of transactions. There's a lot more of digital trail available of operations of banks and of companies, etc., which make credit decisions a lot more easier. So lots of changes are happening on this front. Likewise, on other agencies, take credit rating agencies, which unfortunately had a very, very poor run in the last few years. And we saw
Yes.
that with a few spectacular failures of large NBFCs a couple of years back, right? So again, the SEBI has come out with guidelines on how credit rating agency operations can be rejigged to ensure that governance can be improved. RBI has now come out with a new note, draft note, which suggests how governance of boards in banks can be improved and how it can be strengthened dramatically. Now, so the good news is governance issues, yes, suffer from governance issues because they are ownership neutral. It's not from public sector banks alone, it's across the ecosystem. A lot of work is happening towards trying to address these issues, but I still think we are a long, long way away. And I'll just give one example, KK, here. You know, I hate to use individual names, but this large housing finance company, I don't want to take a name because I don't want to go into specifics, which unfortunately had a failure the last year. Okay, and it was a very spectacular large. Now,
Yeah.
about a year and a half back, I know of a very small boutique in research firm which came out with a report which said that, you know what, this company is having operations which don't make sense. It came out with something, it showed something called box structures, which could possibly be used by the company to siphon out money from the operations of the company, right? This is a housing finance company. Now, I spoke to the analyst who wrote that report, a young 35-year-old analyst sitting in Singapore. So I asked him, you know, what is your data source? Where did you get all this information from for you to make out this lovely report showing how this money is being siphoned out? You must be having some very, very thick source sitting inside the company. Yeah. His answer was, his source was Google. He said, you know what, I have no network in India. I have nobody whom I know in India. A lot of data is available in the MCA database. A lot of data, if you know what question to ask Mr. or Miss Google, you can get a lot of information about directors, about companies, about trails, and you can weave a story together. So his only source was Google. And then he went on to ask me a question which I didn't have an answer to. He said, I'm an underpaid 35-year-old young guy sitting in Singapore, thousands of kilometers away, and I've come out with this detailed report telling you how a fraud is happening. You've got an army of supervisors, regulators, credit analysts, investors, fund managers. What are you guys doing? And I was, you know, I'm in the same category. I could have done the same exercise myself. But, you know, the point is, there is a lot of database available right now. I think the need for us to upgrade the way in which we do analysis and the sources we can look at for fresh analysis has also gone up. Governance is definitely an issue which needs to be addressed at multiple levels. There is work happening. There is a lot more to be done.
Great. I think the kid is thinks that a great job, you know, looking at Google and predicting something is going to go wrong. Great. So I have like I said, you know, bankers would be up in arms, or they will be very interested in asking you questions. We have Harish Prabhu wanting to ask you a question. Very experienced banker. Harish, go ahead.
Yeah, Professor Narayan, good afternoon. You know, maybe, you know, I've been an institutional banker through my life and covered all the banks and known the senior management of most of the banks and have seen the organization of individual banks. I'm not a fan of the fact that private sector banks have, you know, really the governance to my mind is, you know, leaves much to be desired. And it's not a case of one or two, but probably all the major private sector banks, including the smaller ones, including HDFC, ICICI, yes, whatever, right? The reason why I say this is that there is too much of power being concentrated within an individual. I mean, it's been a joke of sorts that, you know, HDFC Bank has had to, you know, rely 2 years, scurry around the globe to look for a successor. And then, you know, finally, you know, get a gentleman who was, you know, in their backward, but not necessarily a business guy, but is more of a CFO, right? Be that as may, I'm not casting, you know, I'm sure he's the best person. There have been so many other things pertaining to, you know, the operational issues, et cetera, et cetera, et cetera. So what I say is that, and I've covered cooperative banks, I've covered private sector, public sector. In my experience of 30 years of, you know, covering institutional banking, I still feel that, you know, State Bank of India has the best governance, the best processes, the best quality of people. So my take on this whole topic is there are not enough professional bankers within our ecosystem who can be, you know, good board members and who could also, you know, actually really put governance systems in place. And there is a serious malaise, and I don't know how we, you know, going to be sort of getting over that, including banking boards, bureau, and you have a lot of things in place. So is my statement correct? I just wanted an endorsement.
So thanks, Harish sir. You know, you're very experienced, so obviously you'll know a lot of these things. I don't want to go into the individual names that you brought up because we can do that over a coffee. You know,
Sure.
Look, I completely agree with you that governance requires a lot of work, and we've been discussing this the last 45 minutes or so, right? And the way I would put it is the following. Look, if you look at the history of banking in the US, which we now consider to be, you know, state of the art and so on and so forth, it's you see egregious stories of governance misdeeds over the centuries. You know, and again, I don't want to go into names, but the best of names in the banking world today have had very, very murky pasts in 50, 100 years ago, right? So the point I'm trying to make is we cannot insist on a perfect system on day zero. I think issues will come up, and even today, in Europe, you had a large governance issue which came up recently. In US, you had a large issue which came up recently. The point is, frauds will happen. The point is, misgovernance will happen. The point is, siphoning of money will happen. I think what we have to take away is the same problem cannot be repeated twice. Let's face it, fraudsters are smarter than the regulators. They're better paid than the regulators. They're more motivated than the regulators. They will be one step ahead, which means that frauds will happen. We should not, absolutely lose our cool if a fraud happens. All you have to make sure is that it cannot repeat again, and learn from that and move on. And you're absolutely right in terms of without talking about the private sector banks that you mentioned. State Bank of India, I can vouch for. I've worked with State Bank of India for over 20 years now in various capacities as a foreign banker. Perfectly fantastic set of people, no questions asked. It's a most experienced bunch of bankers you will find in the ecosystem today. My limited point is, imagine if State Bank of India was allowed to operate on a level playing field. If they were allowed to operate, State Bank of India was in the news recently because they're going to hire a CFO. I think pay him thrice what, or 2 times or thrice what Mr. Rajesh Kumar gets paid for a period of 3 years, and that made all sorts of headlines. Even today, State Bank of India is subject to CVC, CAG, CBI, etc., right? Imagine if they were at level playing field and the cadre that they have. Imagine how much we could have done. So the fact is, India will grow, but India typically grows despite all the obstacles we put around them. Same story with State Bank of India. The State Bank of India will do well, but if you didn't have these obstacles around and all these non-level playing field issues around, they could have done a lot better, in my humble opinion. On the point that you make, sir, on board members not being there, I think it's a fantastic point. As frauds come to light, and by the way, your point on individuals becoming super powerful, the RBI is trying to address that. So you have now this 10-year restriction on promoter, CEOs, and 15-year restrictions on other CEOs. These are obviously means to ensure that no one person becomes all empowering. And it's getting a lot of bad press. You're having a lot of back and forth on whether it's right or not. But I'm completely for it. I think the point you make about not letting individuals become larger than the institution is extremely important for an ecosystem like banking and financial services. So I completely buy with that. But the point you make about not having enough quality board members around to ensure governance, I think is a brilliant point. It's an excellent point. And as a board member myself on now multiple boards, I can vouch for the fact that there is a shortage of good quality people in the country. And I wish more people would come forward and do this. I think as part of this reform journey, we will see changes there as well. For one thing, I think board members need to get paid better. I'm not saying this because I'm a board member. I am biased, but the reality is, if you're putting so much of faith and fiduciary responsibility on independent directors, you cannot make it a charity-based occupation where, you know what, I go there just to get beaten up by the whole world and I get paid peanuts. I literally get paid peanuts because that's what I eat in the board meetings or have a cup of tea, right? So you need to attract good talent. It's not that it's like a charity-based job which you do for the love of the country or something. It's a commercial operation. I think that will happen. The fact that you will get better paid, better qualified board members who can do what is required to, and then hold them accountable. Hang them in case things go wrong. But it's a journey. These things will happen. We cannot fret and fume every time a mistake happens. This will happen. We will never come to a stage where no mistakes will happen. We have to learn from them and move on, progress towards that. One disappointment I have is we are taking a long time to address the egregious issues. And we are seeing repeated issues coming up again and again, which is kind of sad.
Thank you very much.
Thank you, Harish. Very good question. So there are other questions coming. Participants are talking about moratorium. You're talking about deposits. You're talking about migrant laborers. That's not the topic. We will spend a lot of time on these, which are. Let's focus on the topic. It is privatization, governance, meaningful privatization. Please stick to these subjects for questions, Professor. Anything else? I'm not taking it right now because we will just spend time on all these. We're running short of time. There is a view that before embarking upon privatization, we should clear up this NPA. You also said that we are running up with a huge NPA. You said we will be running close to 15% of the of the NPA after the post-COVID. So, do you think that if meaningful privatization is happening or autonomy is be happening, we should first clear up this issue of NPA?
I think that I have sympathy for that view, KK. So here's my take. Look, I think the actual gross NPAs across banks and non-bank finance companies, while the RBI report says it can go as high as 14.7% of advances, I think that's an understatement. Given the deep nature of COVID, I think it can go to 18% of advances. It's a big, big number. It's going to be it's going to be the single biggest challenge that we'll face in the financial services ecosystem. Now, what do you do when you're faced with such a large NPA problem? And what do we want? The result is not that we want the system to survive. The system will survive. I mean, without doing anything, the system will survive. Indian banking will not collapse. Okay, RBI government can do enough to ensure it doesn't collapse. But that is a very, very silly objective to have. The objective we need to pursue is we need a financial services ecosystem that can fund strong growth in India. Right? That's our intent. Our credit to GDP ratio is extremely small. We need that to grow rapidly, which means banks and financial institutions should be able and willing to lend in large quantities so that investments can happen, job creation can happen, output can happen. All this is required. Okay. Now, if that is the intent, we have to find a good solution for the NPAs. Now, IBC is good. Insolvency and Bankruptcy Court is good. NCLT is good. The changes brought about are good. But for 18% of advances, or even 15%, if that's a number, trying to solve that through IBC, we'll die. You'll not get a timely solution because no system can be geared towards handling this volume of NPAs together. Okay?
Yeah.
Which means some kind of a one-off solution for this overhang of NPAs will be required. And to me, there is no option but for the government to step in and try and solve this. And I've seen lots of examples of this in other countries. One example, I think we discussed the last time, KK, was Malaysia, which did something called Harta after the Asian crisis to isolate, quarantine the NPAs. Then, because there was government ownership of all these NPAs, they could change laws, make all sorts of changes, and make sure that the recovery or the resolution happens. Okay, and essentially the jobs are not lost and so on and so forth. I think that interference or that involvement of the government, unfortunately, is required. Now, for a person who's been saying government should not get involved in financial services, I'm saying they have to get involved when things go over our head. And unfortunately, that's the situation right now. The point is, once you do that, once you do the cleanup, frankly, the value that you will unlock in public sector banks will be quite large. Because fundamentally, as Harish was also saying earlier, fundamentally the value of these franchises is quite good. They're good people, good franchises, good branch network, all of that, that can be unlocked. So, and the last bit, KK, is, we are talking about privatization right now. Look, the economy is battered. People don't have, the investment capacity has come down dramatically. When you have limited investment capacity, do you want all that capacity to go towards privatization of banks? Or would you rather it went into other investment opportunities like infrastructure and so on and so forth? So I think purely from a timing perspective, this might not be the best time for privatization. I think it's okay for the government to run it for a while. Autonomy, as we talked about, maybe a better goal, with the government taking ownership of the NPAs, which many of which, by the way, they created over the decades. So, let that at least be resolved. I just want to add one thing, KK. I know we're running out of time. You mentioned moratorium, and you said moratorium is not in scope, but I think it's in scope for one issue. One thing which makes me very uncomfortable is the RBI and the government are telling banks to raise capital right now, right? They're saying, listen, there are NPAs coming up, shore up capital, go out and raise capital. And some banks are either already have or are in the process of raising capital as we speak. Yet, we are in the midst of a moratorium. We are in the midst of forbearance, which means the disclosures around true asset quality and what could really happen to asset quality over the next 2 or 3 years is very, very minimal. I see a complete moral hazard here where the regulator is asking banks not to disclose the full disclosures or not even hazard a guess about how bad things can be. and then asking banks to go and raise money in the markets. I think it's a huge moral hazard because you're inviting retail and savings to come into banking without the full picture being available right now. But I can understand the context. It's a difficult context. Armchair professors like me can sit down and give gyan from our seats. But we are facing a pandemic. Huge proportion.
They're extremely valuable, no doubt. Yeah, Professor, we had this consolidation of banks and making it for global size banks, as the government would call it. So what was the intention? Was it to deliver the social and rural agenda, which they felt was not happening, or to make it more efficient?
Banking, like we discussed earlier, KK, has become a matter of scale now, right?
Okay.
The fact is that amongst the top 20, 30, 40, 50 banks globally, Indian banks don't figure in that list, right? Some of them figure by market capitalization, etc. But in terms of actual balance sheet size and size of operations, they don't fit in that list. Given that banking has become about scale, so that investments can be made into technology, into offering better reach and products to the clientele, I think having scale does make sense. At the same time, of course, you can't come down to a level where it becomes an oligopoly, where some 4 or 5 large players are the only ones who are controlling the entire marketplace, which I think there are enough checks and balances to ensure that. So in that ambit, I think consolidation is a good idea. Rather than having 20 branches of 20 different banks in the same locality, all next to each other, if you can bring it down to 5 banks which offer ample competition and excellent services because of economies of scale, I think it's a good model to follow. But I will only repeat what we discussed earlier, KK. Consolidation is good. It's a good reform. I don't think it's the most critical reform required right now. To me, solution of NPAs, solution of governance issues, and solution of lack of depth in markets are far more important than consolidation. Consolidation can always happen. It's like prioritization wise, it's not the best thing to pursue right now. If that becomes the be all and end all of reforms currently, I think we are wasting a golden opportunity.
Right. So before we wind up, just 2 or 3 minutes, Professor.
Yeah.
As per the initial information on the yet to be released public sector policy, it was said that all state-owned units will be categorized into strategic and non-strategic sectors, which means all PSUs in non-strategic sectors will be privatized, while the number of PSUs in strategic sectors will be capped at 4 or something like that. Some such news had come out. You have any thoughts on these?
Look, we've seen several how do I call it, suggestions that we might pursue a large-scale privatization or small-scale or large-scale privatization in banking, right? In fact, amongst the strategic sectors, as you mentioned, banking was supposed to be possibly one sector as well, where some amount of privatization could have come through. These have not come from official sources, to the best of my knowledge. These have all come from informed sources and sources close to the powers that be. So it does sound like a floating of a balloon to see what the reaction will be, to see whether it's pursuing or not. Again, I'm not a fan of privatization for privatization's sake. What I would rather push for is larger autonomy to public sector bankers, a level playing field, so that they can do what is required and meet their potential in terms of output. Minor 1 or 2 banks being picked up for privatization, I think would miss the larger picture. Okay, larger scale privatization of many banks and leaving only 2 or 3 banks in government hands can also become a political mess at this point in time, right? Because it's a contentious topic. It is not going to be an easy thing to push through. And my point is it really worth pushing through something like this when we have so many other issues to grapple with?
Yeah.
So I'm hoping that the government pushes towards greater autonomy for banks. I think either 1 or 2 banks being privatized with a lot of fanfare, or a large-scale privatization of banks would expend a lot of sound and fury without immediate results. it would just be a waste of time and a waste of opportunity in that sense.
Thank you, Professor. Last question from all the way from Chennai. So let's take that question. Tyag, please make it short and quick.
Hi, Ananth. Just a quick question. It's written on the wall that performance of the banks are in a very bad shape. So having said, my question is, are banks doing banking? What's your view, sir?
Are banks doing badly?
Banking. Are banks doing banking?
Are banks doing banking?
Yes.
Do you want to expand on that question? What context are you asking this question?
The context is why are all these things happening in terms of the poor performance, whatever you said, the government influence, the NPAs. But the question is coming in the back of mind, does bank do banking? That's my question.
So I think it's a very deep question at one level, but I'll try and answer it anyway. Look, there are two aspects to banking as far as I can see. One is you take money from savers and you give money to borrowers, right? And thereby you protect the interests of the savers, and you ensure that you're giving money to borrowers who are able and willing to pay you back. And hopefully in doing so, you allow for the creation of jobs and output and everybody's happy. So that's one big part of banking. The second part of banking is around transactions. So if I have to send money to you or you, so any commercial transaction which has to happen, I should be able to facilitate that, either trade or cash management or transfers or things like that. If we look back, I think there are lots of areas where banking as an ecosystem can take a lot of pride in, including, by the way, regulators, including the government. So for instance, the digitization of our payments, the fact that you have RTGS, NEFT, IMPS, UPI, these are fantastic innovations compared to, when I started banking, many years ago, 25 years ago, we had, paper checks going crisscross across the country, taking 20 days to clear. Compared to that, we are living in a very, very different world. So in terms of making transactions a lot more efficient, I think we've come a long, long way. Likewise, in terms of creating the infrastructure for safe savings and safe lending, in terms of things like putting databases together, a CIBIL database or a CRILIC database, I think a lot of good things have happened. Where we have messed up is at a couple of levels. First is, unfortunately, in this country, including for long-term financing of infrastructure, banks have to step in. Banks get short-term money from savers, savings accounts, short-term deposits. They are really not geared towards lending long-term project loans or long-term, road projects or power plants and so on and so forth. Unfortunately, in our country, we don't have enough of capital markets. We don't have enough of money going into long-term savers and institutions like pension funds or insurance companies, which means infrastructure, financing also becomes the burden of the banking system. That invariably causes problems. So, the big NPAs that we are seeing a lot right now, many of those relating to infrastructure projects, I think were of that making. The fact that banks are essentially should not be doing long-term lending in the first place. The second has been that, governance. The fact that we've not been able to build strong institutions where we live and die by governance and in every sense of the word. It's a journey, and then like we were discussing with Harish, we shouldn't beat ourselves up too much. But the impunity with which we've seen, and I have seen personally, money being siphoned off, impunity with which I see lies being touted in order to get a loan, there is a lot to be done on the governance front. So both in terms of the financing model and in terms of governance and checks and balances, I think there are lots of issues which need to be resolved. I wouldn't beat the system and say you're not doing your job though. I think there's a lot of good which has happened. Hopefully this crisis will make us correct all those big issues which are outstanding as of now.
Thank you, Professor.
Sure, it's no doubt it's a nation builder. Yes, banks are a nation builder, no doubt about that. And public sector banks have a very great role. Today's infrastructure we have is because of the public sector banks. I have a great reputation for the banks. Thanks, KK. Thanks, Ananth.
Thanks. Thank you, Professor. Ladies and gentlemen, we had a fantastic discussion on meaningful privatization. So the issues of public ownership of banks need to be dispassionately debated, and policymakers need to look at this with an open mind. We need to debate like we have done today. We have discussed with Professor. So, the repeated capitalization of the public taxpayers' money is not a solution to the problems which afflict the banking system. So deep and aggressive reforms are required for the banking sector. Perhaps the consolidation of banks is the first step, and look forward to many more policies for the good of the country. With these thoughts, I leave you, ladies and gentlemen. Please join me in thanking Professor Ananth Narayan for a wonderful discussion. We had so much of good thoughts in that, and we look forward for very good reforms that will come in the banking sector. Professor, once again, profusely thank you for coming and spending time with us.
Thank you so much, KK, and to EPS for having me. Always a pleasure being with you.
Thank you so much. Bye-bye.
Bye.
A series of smart contracts and applications which are interacting in an intelligent and programmable way with each other could redefine banking and financial services as you know. This is known as decentralized finance. Join me on 14th August at 3 p.m. in Business Banking Dialogue to discuss and learn more about it.